Hello grade 11s and welcome to this lesson on personal financial documents. We will start by going through the basic characteristics each document should have and then look at a few examples. A financial document displays financial information. Different types of documents include quotations, invoices, statements of accounts, and receipts. These can have a detailed list or summary of information. Let's work through the common details found on most financial documents. At the top of the document, you will find the type of the financial document, for example, quotation, invoice, or receipt. The business's details, including their name and contact information, the issue date of the document, the customer's details, including their name, contact details, and account number. Some financial documents, like receipts, don't need to list the customer's details. Let's look at statements of accounts in more detail. Statements of accounts will indicate opening and closing balances as well as a list of charges or transactions. They will indicate the tariff charges. They should also indicate payment instructions, including banking details, minimum payment, and the due date of the payment. Let's look at a statement of account for a landline telephone. A landline telephone account is a detailed utility bill. This invoice usually has a number of pages. This first page has the issue date of the document, the customer's details. It also gives a summary of all the payments and invoiced history. The second page details how the current amounts are calculated. The customer would be able to see how much was charged for different services. The rest of the pages in this invoice list the calls made by the customer. This is done so that the customer can check if he has been incorrectly charged. When buying any item from your local supermarket, you usually receive a cash slip from the cashier as proof of payment for a list of the grocery items. This is a form of receipt. A receipt is a document issued as proof that a money transaction has taken place in exchange for goods or services. Shopping documents are usually much simpler than other financial documents. They are issued at the till as an acknowledgement of payment. The details of the financial transaction include the business's name and details, the items bought, and the details of the payment are all visible. We can also see the VAT that was charged. Remember that VAT is not charged on everything. Some goods are VAT-free. The warranty, refunds, and exchange conditions will be listed somewhere on the receipt. This will tell you under what conditions you are able to take the purchase back to the shop. An invoice is a very similar financial document to a receipt. The main difference is that an invoice notifies customers of money that is owed, while a receipt is the proof that a payment has been made. On the invoice, the items that are being purchased are usually listed in detail and the price per unit is listed too. Depending on who is issuing the invoice, it is sometimes named as follows. Sales invoice, if the invoice is issued from the point of view of a seller, and a purchase invoice if issued from the point of view of a purchaser. On some invoices, the terms of payment are specified. Cash on delivery, COD, payment within 7 days, and payment within 30, 60, or 90 days. On the invoice, the seller may state that if paid within 7 days, a discount will be given on the amount owed. This discount is a motivation to the purchaser to pay the debt and assist the seller to improve their cash flow in the business. Let's look at an invoice for a rental agreement. This invoice shows the amount of money that is due to the landlord at the end of the month for rent. Let's look at the features that we have discussed earlier. Name, address, and contact details of the rental agency. Document date, invoice number, and the details of the customer. Details of the time period of statement. Payment instructions telling the tenant to pay into a bank account. the warning of a late payment is given. Quotations are issued by businesses to customers who want an estimate of the cost of items or service. A quotation will display the name, address, and contact details of the business, a list of items or services with their expected costs, the cost of VAT. A quotation usually includes wording like, "This quote is valid for 14 days" or "while stock lasts." This means that if the customer wants to pay for these items or services, they need to do so within 14 days. After that, the prices may change. The abbreviation E and OE is often displayed on financial documents. This means error and omissions excluded. This reduces legal liability for any errors that may be printed on the document. When a written quotation is accepted by a client, the supplier usually requires the client to sign the quote to confirm that all the conditions have been accepted and thus become binding on both parties. Thank you for joining us, grade 11s. Remember, the tasks for this section can be found in the Basics of Finance task video. You'll also be able to learn more about finance on our website, www.mindset.co.za/learn. Take care.